My name is Walter Peters, and I'm a full-time trader. I wrote the book called Naked Forex, and I like to use really simple methods of trading, normally just without indicators, simple support and resistance patterns. And because I have a background in psychology, I have a PhD in experimental psychology, I take kind of a psychological point of view for trading, which is to many traders quite interesting and useful, particularly if you've been trading for some time, because what I've noticed is that many traders run into these issues later on in their progression. Hey, Adam, glad to have you here, buddy. Thanks, guys. What we're going to do is we're going to talk about the two pieces that you need to find consistent profits. Luckily for us, there's only two things that you need to find profits as a trader, consistent profits as a trader. Hey, Gregor. Unfortunately, as it turns out, even though there are two simple things you need to do, it seems to be the case that it's very difficult for many traders to do these two things. So we'll talk about why that is and some of the hacks and tricks and techniques that you can use to get on the right track if you find yourself struggling with one or the other. Now, before we get started, I'd just love to throw it out there. What, why do you think it is the case that we actually have two things, or which two things do you think they are? So there are two steps. There's two broad pieces that you need to have in place to find consistent profits. What are they? Any ideas? What would they be? What would the two things be? What would the two things be? What are the two things that we need? Any ideas? Money management, sticking to the plan. Yep. So I would say that uh, those are elements of the two big things. Gregor agrees with you, EC. Those are two elements. So I would I would call money management and your trading plan kind of in one area, and then sticking to the plan is actually in another area. Really, really, what it comes down to, guys, and I'm sure this is not going to come as a big surprise, is that you need to have a system that is a has a positive expectancy. Is everyone familiar with that? So you know what that means, right? It means that you're going to it's like when you run the numbers on the games in Las Vegas or at casinos, you'll find that you have a negative expectancy. So the casino has a positive expectancy, and you have a negative expectancy. Can you get lucky and win? Yep. Is it likely that you will? No, only in short stretches. So that's that comes down to working out what your numbers are. And essentially, what you do is you take the win rate and you multiply that by the average winner. Okay, and then that'll come up with the total. And then you subtract that from the loss rate of the losing percentage of losing trades multiplied by the average loser. And the number that it spits out should be a positive number. If that's a positive number, then your trading system has a positive expectancy. Doesn't mean it's going to make money, though. Why? Why is it that it doesn't mean that even if you have a positive expectancy system, why might you still not make money? And EC kind of hinted at this earlier. So if you don't have a positive expectancy, or if you do have a positive expectancy, but you're not making money, it could simply be as simple as you here, let's do this. Let's do the online calculator. So does anyone have the numbers for your strategy? Do you know what your average winner or your win rate is and your average winner and your average loser? The reward doesn't necessarily have to be greater than the loss, which I know is I know we are taught as traders that it has to be. So scalpers, for example, are the classic example. If a scalper wins 85% of the time, and that scalper makes $500 per trade on the winners, he's making 425 bucks, right? Okay, so he's making 500. Okay, so he wins 85% of the time, and he's 425. Okay, now he loses, right? He loses 15% of the time, so that's 425. We in our first part of the equation, 0.15 times 650. So he loses 650 bucks, right? When he loses, but he only loses 15% of the time. So that's 97.5. So, right? 425 minus 97.5, that tells us that he has a positive expectancy system, right? So for every 650 bucks he pushes through the system, he's expected to make $327.50. So that's an example where the winner is smaller than the loser, but because he's winning so often, it still makes money. But the opposite is also true. I might win 30% of the time. So let's say I win 30% of the time. You guys see my can you guys see my calculator on the screen? You should be able to see a calculator on the screen. Awesome. Okay. Yeah, so sorry, I'm sick. I'm a little bit sick from got my son's cold. Okay, so 30% of the time, and I win oh, sorry. 30% of the time and I win 900 bucks, right? Or 900 euro or Swiss franc or whatever. So that gives me 270, right? But then I lose, so that's 270. Okay, so we'll remember that. And then I lose 70% of the time. But those losers are only, 250 bucks, right? So 175 and 270. So I have 270 minus 175. So I'm making money. See, I'm still making money even though I'm losing 70% of the time. And again, the the interpretation of that is, what did I say my loser was? 250. For every $250 I push through, I risk through the system, I'm making 95 bucks. So that's basically what that says. So yeah, so this is kind of the thing that you have to lock in first. Okay, so when it comes down to it for your trading, there's two simple things you need to do. You need to have a positive expectancy trading system, and you understand the risk parameters of that strategy. And the second thing is you need to follow it. It's the reason why. Has everyone here heard of the turtles? The big experiment with the turtles where Richard Dennis and William Eckhart had a bet, and everyone's heard about this, right, from the Market Wizards book? Yeah, yeah, yeah. So you see, there's two ways to have there's two simple, broad types of strategies. One has a really big winner, but doesn't win that often. That was the 30% win rate strategy, and another one has uh, a winner that's not so big, but it wins really, really often. And you actually have more leeway to be an idiot or to screw it up a bit, and it makes some big mistakes if you have a strategy where your winners are much, much bigger than your losers. Also, your broker cannot really, it's harder for your broker to kind of mess things up for you in a sense as well, if that's your concern. I don't think that should be your concern. But if it is, that's another, if you get slipped or whatever in your trades, with a higher reward to risk ratio, it's a lot easier to deal with that. But the point is, there's two basic things that we need to understand here. It's that we have a system that works, number one, and two is that we follow the system. Richard Donchian, who came up with the trading strategies that were supposedly used by Ed Sequoia and definitely used by the Turtles, Richard Dennis and William Eckhart's group of student traders that ended up, I think, almost all of them, maybe except one, went on to manage millions and millions of dollars. What was interesting about that is they used the Richard Donchian trading system. And it's a little known fact that Richard Donchian actually taught a 16-week course at a university on trading. What was interesting, I find most interesting about this course, is that he spent 2 weeks explaining the trading system, and he spent 14 weeks trying to convince the students that they should follow the trading system. Now, what does that tell you about what Richard Donchian thought about, the two different pieces? If we're saying that the two different pieces here are trading system and the psychology or following the trading system, essentially, and convincing yourself to follow the trading system, which is what he spent the lion's share of the course telling the students, 14 out of 16 weeks, telling them you really should follow this strategy no matter what. Well, that tells you that obviously he thought that psychology is a much more important aspect. It's really only something that comes up, though, after you have some experience. So congratulate yourself if this is something that you are looking at and delving into, because it means that you are in the latter stages of learning how to trade. That means you're in a really good spot. If you're only interested in trading strategies, then this is something that's going to come later for you, and that's fine. There's nothing wrong with that. I understand that. I've gone through the same stages that every other trader goes through, but really you need to understand that in the end you're going to spend a lot of time on self-reflection, on getting to know yourself and understanding yourself. That's really going to be where you're going to make the big gains as a trader. Okay, so we've established that we have a positive expectancy trading system. So the one that we had here, I had a 30% win rate, and my reward to risk ratio was better than 3-to-1, wasn't it? I think it was about 3.3 or something like that. I don't recall. So this is at fxjake.com/risk, and it's a free risk calculator. There's a video here you can play on how to use it. I want to ask my webmaster to make this video bigger so it's a little bit easier to see. You can make it bigger, though, by clicking that button. But the point is, if I'm risking 2% per trade using the fixed fractional method of money management, which is the most popular one, certainly among Forex traders, and I have a reward to risk ratio of 3.3, so I'm making $3.30 for every dollar at risk, and I'm winning only 30% of the time, and I'm losing 70% of the time. I want to know what my risk of drawdown is. What's the likelihood that I am going to hit a 20% drawdown over the next 1,000 trades? Well, it turns out I am. I've got a 100% chance of running into a 20% drawdown. Why is that important to know this? Why would I even want to look at this? What's so great about this risk calculator? Why do I keep talking about it in all my podcasts? It seems like every podcast has a reference to the risk calculator. Why would that be? Why am I? I'll tell you why. The hint here is that this is why traders fail. Let me state this another way. The number one reason why traders give up on trading systems or give up on trading altogether and never really become an expert at any one given strategy is because they fail to understand this. They think that they project the profits, but they fail to consider the drawdowns. And if I think that a 20% drawdown is just terrible, or that a 25% drawdown shows me that I'm just not really, I'm not really doing anything. I'm not really or a 30% drawdown means that my trading system is broken, or that a 35% drawdown means that it's time to reassess and change the trading strategy. I've basically got a 75% chance that I am going to have a 35% drawdown given these risk parameters here. Given that I have a 30% win rate, given that my winners are still 330% bigger than my losers, but I'm risking 2% per trade. And if I take 1,000 trades, I'm almost guaranteed to have a 35% drawdown. This is important, guys. This is really important because the reason why you stop trading a system is because of this, is because you hit a level. But almost every single trader fails to consider the math behind where their system is sending them. Right here in this calculator is telling you you are almost 8 out of 10 that you're going to have a 35% drawdown. If you think a 35% drawdown means your trade changed, that's another excuse, right? We say the markets have changed, or we say the system doesn't work anymore, the system's broken. Well, it's the system's broken. We have the risk wrong. So we might reduce this to 1% per trade using the fixed management, which is not the only method of money management, by the way, but it is the most popular one. I reduce it now to less than 5% of a 35% drawdown. But what if I say I only want a 20% drawdown as my max drawdown? Well, I'm still in trouble because I still have a better than 50-50 chance of hitting a 20% drawdown over the next 1,000 trades. So maybe I have to drop it down to 0.7 of 1%. Even then, I still have a 15-20% chance of a 20% drawdown. So what if I drop it down to half of 1%? I basically have like a 2 in 100 chance of having that drawdown, which is not ideal. I'd like to have it even less than that. So 0.4 of 1% would get me almost there. But probably I'm going to want to do about 0.3 of 1%. Don't hit. And I'm very, very unlikely to have a 20% drawdown if I'm risking 0.3 of 1%. So that tells you what you need to know about your trading strategy. And really remember, the major reason why traders quit trading systems is because of this drawdown. They hit the drawdown, they think they need to change the strategy, or they hit the drawdown, they say the market's changed. And most of the time, that's not the case. Instead, really what's happened is we've simply run through the statistics that we didn't realize we were risking so much using the fixed fractional method of money management that we were guaranteed to hit this drawdown. Does that make sense? Everyone cool on this? Clear on this? Cool. So really the main thing I want to get across here is you need to make sure you have a positive expectancy system, and you also need to understand that, you know what, I'm not going to hit the max drawdown level that's a freak out level. And a lot of times traders will say that they can withstand a 30% drawdown, but once they hit 15 or 20%, they're in total freak out mode. So try to be honest with yourself. Remember, if you're trading 200,000 euros in your trading accounts and you have a 20% drawdown, that means you've lost 40,000 euros. 40,000 euros is a lot of money for many people. So, losing 40,000 euros with your trading system might be enough for you to kind of reconsider. So just keep that in mind, that a lot of traders overestimate the drawdown that they are able to withstand. I know a trader, pretty well-known trader. He would always stop trading when he hit 5%, and it seems crazy, but that's he knew, like, if it hit 5%, he's like, oh, it's not working anymore. This is I'm gonna scrap it, So it's something to keep in mind. All right. So we understand that we need to have positive expectancy, and we need to have our risk set. The easiest thing to change here is the risk per trade. Can you change the reward to risk ratio? Yeah, but you have to change the trading strategy, and that's usually the exit. Can you change the probability of a win? Yeah, but that's exit related, and it's also related to the rules of your strategy, somewhat to the entry as well, but that's kind of overblown. The entry is probably not nearly as important as the exit. The exit will definitely affect the probability of winning, and it will affect the reward to risk ratio, no doubt. So you can change the strategy, but the easier thing to do here, if you're comfortable with the strategy, you like the logic, you like how it works. It just simply changed the risk per trade. And the added advantage of trading such a low percentage, such as 0.3%, means that you're probably more likely to stick with your strategy. Okay, so we've got that first piece down, which is the money, is the trading system going to make money, and do we have the risk right? Okay, so that's the first part. Does my strategy make risk, or make money? The second thing that we need to look at here is basically you. So, so it comes down to you executing your strategy. So why are some of the reasons why traders decide that they don't want to trade the strategy according to the rules? Why do some traders decide that they do not want to trade their strategy according to the rules? Any ideas? Yeah. If they're undercapitalized, absolutely. Yep. So they're undercapitalized, so they want to, ramp up the risk and multiply their results quickly or whatever. That's pretty common. Very common, actually. Yeah. Yeah, that's true. So a lot of times what will happen is traders decide that they're not going to stick to the rules because they think, it's not working anymore. Again, we talked about the risk parameters and how important those are and establishing what your max drawdown that you're able to withstand is. We've talked about that, but beyond that, it's really important to understand that we're not really built to trade. So we people aren't we don't have the psychology, so to speak, to take trades and to do the right thing. We have the psychology, like, if you think about it from hunter-gatherer times, we were really good at finding some, if we were out, in the forest and we saw some berries, we would grab the berries and we'd eat them quickly, right? Well, in trading, that doesn't really work. If you have a trade and it has some profit, taking the profit quickly and then moving on to the next trade, we know that doesn't work, right? Cutting your cutting your losers short, cutting your winners short and letting your losers run is the number one mistake that too many traders make. We know that. We have data to support that. You can look at the trades that retail traders take, and they do that over and over again. So the other reason why we were unable to make consistent profits as a trader, especially when we first start trading, is we fail to consider that the element that is us, right? So if you know about software, they say, it's user error, right? That's kind of what we're talking about here. So you need to have a profitable strategy. You need to fine tune the risk so you don't hit your max drawdown level. And then the next thing is you need to follow it. So what are some of the things that you can do to make sure that you follow your strategy? Any ideas? What can you do to make sure that you follow your strategy? And as soon as we cover this, then we're gonna jump into the live chart. So get your live chart questions ready. At the ready. Ah. So what can you do to make sure that you follow your trading strategy? What can you possibly do? Buy handcuffs, yeah. Yeah, it's a sad. I mean, there are those stories out there of the traders who saw off their hands and stuff like that. Like, just if I saw off my hand, I won't be able to take a trade or whatever. Like, it's just crazy, right? But that stuff happens. The sad story of Jesse Livermore, of course, we may be familiar. He's not the only trader who's had that problem. A lot of traders take their own lives because they're unable to manage their impulses or emotions or whatever. So it really is important that you understand, you are the biggest barrier to your trading success. And so, how do you understand yourself, or how do you work on yourself? Well, there are lots of things you can do. Did you know that, if you, it doesn't matter where you are in the world, there's likely a hypnotherapist nearby. Do you know what do you know what hypnotherapists work with? You know what they help people? What are the two big things that hypnotherapists do? The two most common types of problems that people come in with when they go to a hypnotherapist. Do you know what they are? Insecurity, fear. That could be going on a deeper level, but the most like the you can ask them too. I'm not, this is like when I talk about a trading strategy. I'm not here to tell you that this is absolutely 100% true. I'm just here to tell you, hey, look, check it out for yourself. Ask a hypnotist, a hypnotherapist. Ask them, say, what is the most, what do you usually see? Like, who comes in to see you? The most common ones are they want to lose weight or they want to quit smoking. Those are the phobias can also be in there, but I think those would be number three. The most common ones would be I want to lose weight and I want to quit smoking. And then after that would be phobias like fear of dogs or, fear of small rooms, things like that. Fear of germs, whatever, right? But a lot of times people go to psychologists for that sort of thing. So, yeah, so let me ask you something. If you have so really when you think about it, losing weight or stop, if you stop smoking, or if you want to stop smoking, if you want to lose weight, guess what? What do you need to do to lose weight? You need to work on what? Your habits, yeah. You got to work on your habits. Just like if you want to stop smoking, it's a habit. You're working on a habit. That's what if you stop smoking, then you are working on a habit. If you want to lose weight, then you're working on a habit. It's a habit of exercise and the habit of what you eat, right? Those are the two big ones. So let me ask you something. Do you think if you went into a hypnotherapist, they could help you with your trading habits? Absolutely. Absolutely. That's right. So your hypnotherapist, you can go and get hypnosis, and hypnosis can help you stick to your trading strategy. Because remember, we talked about it. Look, profitable trading isn't difficult. I've given you several trading strategies in the Naked Forex book. I'm sure many of you have read. You can pluck any number of trading systems off the internet for free that are all designed to make money, and many of which have a positive expectancy. Not all, but many do. And yet, people still struggle to make money. It isn't because of the trading system. It could be because the risk is wrong, but we've already covered that. Really what's going on here is it's the user. It's user error. So one way that you can work on yourself to get better at this is to go to a hypnotherapist. Identify what your habits are that you want to change, and then have your hypnotherapist work on those for you. And a good one will even give you a recording, like a an MP3 file of the session, so that you can listen to it later. So you really only have to go like once. You get the recording, and then you can listen to it at home and do it every day on your own. And I have a good one too. Let me know if I can point you out to a good one for traders that I actually had designed for Forex traders. But that's one. Another thing you can do, and I think somebody touched on this, you can use a journal. Who wrote that? Who said that? Was that Kareem? Yeah, I think that was Kareem. Yeah, so journal is another good one. If you have a journal, you can go back and look at your thoughts. You can also rate your trades, rate your entries, rate your exits, see how you're doing. Another thing you can do is you can get a book of perfect trades. So kind of like a trade examples. So you can refer to that and go, look, does this trade fit? Does this trade fit what an A trade looks like? Yes or no? This is an A trade. In my A trade example book, this is sort of my manual. Does this trade look like that? No? Okay, I'm not going to take it. That sort of thing, right? Again, what we're trying to do here is break you out of your habits, whatever those habits are. If those habits are taking impulsive trades because somebody at FX Street told you to take it, then that's one thing, right? But if it's something different, if it's like, it looks pretty good. It's not a perfect trade, but it looks good enough. I think I'll take it because you're kind of bending the rules. Then having that A trade example booklet in front of you can really help. So hypnosis is definitely useful for like if you have a habit of taking profits too early or something like that. Hypnosis is really good. Even if you have an impulse, you take a lot of impulse trades, hypnosis can work for that. A journal is a really good way to X-ray into your beliefs and see what you've been doing. Also, you can take screenshots. And by the way, taking screenshots and writing your journal on your computer is fine, but it's even better if you write it out by hand. It activates a different area of your brain, and actually writing it out by hand with a pen you'll remember more, and it will do more for you. So it's a better way to keep a journal. I know it's a pain, but it's kind of nice too to have like you can buy these beautiful journals, you fill it up, and then you go and buy the next one, right? And you can file them away on your bookshelf, and you go back and refer to them. It's a really good way to keep track of how you are doing. You can also reward yourself. So you can reward yourself for sticking to your rules. Give yourself a mini holiday. So you can set up a reward system, which is great. An excellent way to do this, to focus on the process and not on the outcome. You can also, and this is a big one, TAP, Trading Accountability Partner. So in the private forum that I run, we actually hook people up with trading accountability partners. So this is a person that you talk to every week. They know what you're working on. They know what's been going on, and basically you've got to report to them and tell them this is what's been going on. This is really critical, having someone that you're accountable to. Do you know what happens to bank traders when they leave the bank? So a lot of bank traders will end up going off and starting their own fund or just trading for themselves or whatever. Do you know what often happens to those guys? Sad but true. What normally will happen is they don't do very well. They don't do nearly as well as they did at the bank. And one of the reasons why this happens, one of the big reasons, is because at the bank they have someone to be accountable to. They have a risk manager who will tell them, your trades, you have too much risk. You need to lighten up on your trades because like if I said, hey, who's someone that's here? Was George here? Who is here? Gregor. So say, hey, Gregor, your number is 47 million, and your risk is inching up above 47.2 million. This is not right. This is too much. You can't risk that much of the money. So boom, get that down, and then the next time that you do that, your risk manager is gonna say, hey, Gregor, I'm sorry to say, but we're gonna have to let you go. You didn't get, this is the second time you've done that. This is the second time you've risked too much of our money here. You're way above your number, so I'm sorry, but we're going to have to let you go. See, the bank doesn't really care when you come into the bank, they don't really care if you're not making money as a trader. They know that they can teach you to make money. But what they do care about is if you take too much risk. So think about that. So if you have a trading accountability partner, you have someone that is going to be that person that's going to go over your trades and ask how you're doing, and you have to be honest and upfront and show them what's been going on. It's a great way because in the back of your mind, if I do this, I have to talk about it on Saturday when I meet my trading accountability partner, whatever. It's in the back of your head. Another one that I really, really recommend for you guys is called subliminals. And subliminals are all awesome. You can email me if you have any questions about the best subliminals. There's lots of them out there. I have my own pet favorites, but the way the subliminals work is they help you. Like if you have a problem with impulse control, you can listen to the impulse control subliminals, just like hypnosis. You can get all these different hypnosis tracks. Like I had the one made for Forex traders. The reason why I did that was because I told the company that made them, I said, look, you guys have a great one for traders, but that's more for like share traders, stock traders. It doesn't really work for Forex traders. The things you're talking about in there, they're not really the right thing. And so they made one for me, and it was great. Now subliminals, you can listen to these when you're back testing, when you're in front of your computer, when you're sleeping, just about any time you want to, except probably when you're driving. You probably wouldn't want to do it then. Not that you would fall asleep listening to subliminals, but it's definitely nice to be relaxed. And I like the ones that have the ocean sound and the so what happens is you're listening to the ocean sounds, but inside there are some messages that are helping seed your subconscious with profitable beliefs and ideas that will help you overcome some of your trading challenges. So if it's impulse control, for example, you listen to the like impulse control would mean you're taking trades that are outside of your rules, right? So you could use that subliminal. Why do retail traders lose? Because their mindset is to lose. I mean, everybody say you're going to lose, so your subconscious is shaped for future losses, right? The main reason why Kareem retail traders lose is because they cut their winners short and they let their losers run. I'll tell you a quick story. I had a friend of mine who started a fund, and he told the Forex fund. He even had the software. The software was created, custom programmed, so that they could use this software with their traders. And he told the traders, look, I'm going to put you on a demo account, and if you do really well, then what we're going to do is we're actually going to move you to a live account where you can trade for us, and we'll pay you some of the profits. So we'll pay you to be a trader for us. But first you have to qualify. And do you know what he did with those traders? All of the traders who came to him to qualify were given a demo account, but that demo account actually was a real account. It was actually trading money, and the system reversed their trades. And I said to him, I said, aren't you ever worried that you're going to find a trader in there that's going to make money? He said, well, they largely let their losers run and they cut their winners short. He said, yeah, we might get a few winners in there, and I can graduate them up to the to the standard account, give them money and all that. But the vast majority of them simply cut their winners off quickly and they let their losers run. And we have these data. You can find these data. You can email me and I'll share the link with you. 43 million trades. $43 million worth of trades. And even though the retail traders won more often than they lost, you can email me and I can send you the links and stuff. But and recommendations, subliminals, and hypnosis tracks, all this stuff, I can help you guys if you want. But the main thing here is that they won more often than they lost. So they had like a 58% win rate or whatever it was, 56, something like that, 57, somewhere around there. And their losers were so much bigger than their winners that they still lost money. So they won more often than they lost. They cut their winners short and they let their losers run. And that's basically it. Positive psychology affirmations such as I will take good trades. I will take good trades. Do you think it can work? I actually just did a webinar about this last month. Interesting question. Not as well as you would think. So here's the thing. That can work. Like using those mantras and that can work. But you've got to put yourself in the right mindset, which brings me to another one. Another really good tool to use is brainwave entrainment. This is when, and I have some really cool ones. This is when you list brainwave entrainments. Well, there's multiple different brainwaves. So what you do is you get yourself into the right brainwave. So you basically, you guys right now, if you're awake, hopefully, you're in beta. As you get to kind of relaxed and you're sort of dozing or kind of dopey, that's alpha. When you're watching a movie or watching TV, you're in alpha. And that's why they run the ads on TV and when you're at the movies because you're in alpha and you're susceptible to suggestion. So it's really great time to run ads when you're in alpha. Uh, and then theta is the next level where you're kind of deep, deep. This is sort of like deep, deep meditation. And then finally, delta is when you're in deep sleep. So the point here is that you can get yourself with meditation or brainwave entrainment tracks. You can get yourself into the right mindset and then use those mantras or use them in, same thing with hypnosis. You can, with hypnosis, get into alpha quite easily, possibly even theta, but more likely alpha. And you can use those positive affirmations, but they're going to be more useful in things like subliminals, hypnosis tracks, and brainwave entrainment. They're not going to be as useful to use those when you're in beta, which is just normal waking mindset, normal waking brainwave. So they're not nearly as useful. The other time that you can use them is actually right as you're falling asleep. This is hypnagogic. Hypnagogic. So you can use hypnagogic suggestions where you repeat these things over and over again just as you're falling asleep in the hypnagogic state. So that's kind of like use these hypnagogic mantras. Does that make sense? So you can use them, but they're not going to be the best approach. You got to kind of coordinate them with something else. All right. So hopefully that helps, guys. These are a lot of tools that you can use. What is the work that needs to be done with a hypnotist? Well, it's going to depend on what your trading challenge is. So if your trading challenge is that you're an impulsive trader and you take trades, when you shouldn't, you just explain that to the hypnotherapist. They'll put you under a trance, or you actually allow yourself to go into a trance, and then they'll give you suggestions that this is not what you're going to do, right? So, for example, if you have a trailing exit and you keep cutting your trades off before the trailing exit is executing the trades and getting turning the trades off and getting the trade, kicking you out of the market, if you don't let the trailing exit do its work and instead you decide to take profit too early, basically, because you're not letting the trailing exit do what it's supposed to do, your hypnotherapist can help you with that. If you're taking trades you shouldn't take because you're an impulsive trader, your hypnotherapist can help you with that. If you're risking too much, knowing that you want to risk 0.3% per trade and you end up risking 2%, your hypnotherapist can help you with that. So it depends on what you're... Yeah. Your trading challenges will change depending on where you're at as a trader. It's not the same for everyone. So if I say to you, Kareem, hey, you got to do, your big thing is working on your exits. You're not letting your trailing exit do its job. And then I say Gregor tells me that his big thing is he keeps taking these trades that aren't even a part of his system. He's got these impulsive trades popping up. And then, Suzanne tells me, I know I should be risking 0.3%, but I just can't stand it. The trades are so small, so I'm risking 1% instead. And then she hits the really bad drawdown because she's been risking 3 times what she should. So it really depends. Yeah, it really depends. All right, are there any charts that you guys want to have a look at? I'll show you the ones that I'm in. So right now I am long Euro Swiss. I moved that stop to break even, and it's up. I think I got in around 1680 or 1678 or so. So it's up about 100 pips, basically. 95 pips or 96 pips, something like that. And then I'm going to go long Euro Aussie, but I probably want to see it bounce off this trend line. And I probably would like to also go long Euro, but I don't like the way it spiked higher or during Asia today. I watched that. Many of you were probably sleeping, but here in Asia, I saw that spike and I thought that's not good. I would have rather seen it go lower during Asia and then start going higher now. I want to go long the pound, the euro, and the Aussie, but I just don't like how these. Actually, the pound's got a really nice one. Look at that. Shoot. I missed that sucker. That's all right. I'll take the next one. Um, yeah, there's an Aussie one too. Look at that. So that Aussie, there was a home run trade there with the 16 pips of risk, and you'd be up 20 pips now. All right. So yeah. So the main ones I'm looking at are this week. I want to short the Euro Swiss if it gets up to this area at 97 even. I'd love to get a short up there on a bearish candle. I like to trade the last kiss on the yen. So see how the yen is in this box here? I want it to come back up and touch this box, which is at 111.15 with the bearish candle, and I'll sell on the daily. Canadian dollar doesn't really do it for me. It's kind of ugly. And to be fair, like even the euro is looking kind of ugly at this stage. I probably would have to say pound looks awesome for a buy, and the Aussie looks awesome for a buy. And yeah, that's probably about it right now. Those are the big ones. You know, if the Swissy can get up here and give me a bearish candle, probably on the 4 hour at 97, I'll sell it too. But those are the big ones. The Aussie CAD also yesterday. Well, West Texas crude feels pretty cool. Let's see what's going on here. This is kind of interesting because it's been in an uptrend, but I think it's actually breaking down below this trend line at this stage. So if it breaks down below this trend line, comes back up and touches it, I could short oil. That's the 4 hour oil chart. Um, and where is my Aussie CAD? I think it's over here. Yeah, Aussie CAD, if it closes as a really nice bullish candle, I don't know that it will, but it looks good now. We'll see what New York does. This would be an Acapulco trade, and I would look for it to bounce off of 99. I could put my stop loss down below here at 98.76 or whatever and go long. If tomorrow, if it closes bullish today and tomorrow it wicks into this 99 level, I'd be interested in going long either on the bounce right here at 99 or even above today's high or tomorrow's high, whichever has a higher high. That would be kind of a trend continuation play. And you can see here that this weekly Aussie CAD chart shows there is a pretty good zone up at 1.0050. So this could go a ways. So that is a very interesting chart to me. I just need to make sure that we close the strong bullish candle well above these highs over here, and then tomorrow that we wick into the 99 zone, and then that would give me an Acapulco setup. So that one is definitely on the list as well. Yeah, hypnagogic is the state where you're falling asleep. So just as you start to fall asleep, and hypnopompic is when you start to wake up. These are areas, these are states of mind that are where you are highly suggestible. So, you know, right as you're falling asleep. Hypnagogic, that's what that is. Okay, cool. Hey, you guys are awesome. Thanks so much for spending time with us today. I really appreciate it. I hope you have a wonderful trading week. Hopefully this has helped you to identify the two main pieces and to know that, okay, it's the system. It's my risk I need to work on here. This is what's going on. Or, hey, it's me, you know. It's me. I need to work on myself. Hopefully that's helped. I really appreciate your time, guys. I hope you have a wonderful trading week, and I hope to see you again at another webinar. Thank you.